Good morning, everybody. My name is Jon Gilligan. I'm the President and COO of Liberty Gold. I'm delighted to be here this morning. Thank you for everyone here for attending. And for the people online, thank you for getting up early on your Saturday morning to hear the story that Liberty has. I will be making forward-looking statements. These are the cautionary notes. They're available on this presentation and on our corporate deck online. Please read them at your leisure. Liberty Gold's DNA is exploration. And it's been extremely successful in this iteration and prior iterations in discovering and then on-selling gold projects in the Great Basin, the most important being Long Canyon. We are now rapidly metamorphosing into a junior developer, and we're taking our Black Pine through the sequence, eventually to construction and operation. We got $11 million in the bank at the moment, as of last reporting. 42% held by institutions. Some of the big players in the game have been with us a very long time. The Van Ex, Merckx, Franklin, and we like their support. We're grateful for it. Wheaton came into the game approximately 2 years ago, and they hold the 0.5% royalty on Black Pine, which is our flagship asset. We have a 50% buyback right on that to take it down to a quarter-point royalty. That's a pretty remarkable number for such a large asset in the US and gives us a lot of operating flexibility. A year ago at this conference, we were an explorer. We had a 2.2 million ounce resource in our Black Pine deposit, a 1.2 million ounce resource in Goldstrike. In the last 12 months, we've really transformed the company. We've released an updated mineral resource for Black Pine, which gets us just under 5 million ounces in resource, so that's a 3 million ounce increase in resource over the year. We've completed and released a pre-feasibility study, which shows some very strong economics for that asset. We've virtually doubled the footprint, exploration permitted ground footprint, to allow us to do exploration peripherally to the main deposit. We've divested our Turkish assets, and that now provides us with an income stream over the next 2 years as part of that deal, and that allows us to focus on oxides. And to add a little spice to the whole conversation, we've discovered high-grade antimony at our Goldstrike deposit in southern Utah. So a lot going on. 25 is going to be a big year as well. We're going to take Black Pine into feasibility. We're going to figure out what does the antimony piece look like at Goldstrike, and take that to its logical conclusion. We brought on, as part of this metamorphosis, we brought on Matt Ziedlow, who is a NEPA permitting specialist, great deep experience in permitting oxide gold deposits in the US. He's now leading the charge, taking Black Pine through that NEPA permitting process. We submitted a preliminary mine plan of operations. That's the first step in NEPA permitting this week, and we're off to the races on that. A few more details on Black Pine. This is a detailed location map. We're about 2 hours north of Salt Lake, about an hour away from the nearest town in Idaho, which is Burley. That's about 25,000 people. This is a previously producing site. The mine was operated in the 90s. The workforce came out of Burley. It is a very available, very open, strong community support for us in this region. We spent the last 3 to 4 years de-risking the project ahead of pre-feasibility, so we have 100% of our water secured. We have power at the main gates. We have no road access to build. And from an environmental perspective, this is Nevada. It's not the forested, streamed surface water area that one thinks in northern Idaho. This is dry, arid, no streams, no lakes, no surface water. It is an ideal place to build, or rebuild in this case, a mine. In a nutshell, this is where we are. We have a just under 5 million ounce resource, 4.2 in indicated, 0.7 in inferred. That's at $2,000 gold. 3 million ounce resource, of which 2.2 is converted into production metal. All of that is underpinned by just over 1.7 million ounces of high grade. These are lenses within the resource at around about a gram. That's at a 0.5 cutoff. And those lenses really drive the economics of this deposit. We see lots of upside potential on these numbers, and we're going to be in the field drilling within a couple of months to build on these resources as we go into feasibility. Snapshot of the pre-feasibility study. As I said, 2.2 million ounces produced over 17 years. Reasonable initial capital, 327. 3-year payback at $2,000 gold. That drops to 1.5 years at 2,600. Nice IRR, 30%, doubles at current spot prices, and lots of leverage to gold price for NPV, $500 million at $2,000 gold, 1.2 at 2,600. A good project, nice economics, lots of upside. Just under 200,000 ounces a year production for the first 5 years, 135 life of mine average. AISC costs, I think, are very reasonable, very controlled, $1,208 for the first 5 years, $1,380 for life of mine average. A good, solid project with a lot of leverage to upside gold. This is the production schedule in the graph. You can see those early years. We're getting 3 years above 200,000 ounces. The back end of the mine, we see a little drop off in production, and we're now targeting, during our feasibility drilling, that 500,000 ounces to go into resource to pad out that back end of the schedule to give us our target of 150,000 ounces a year for 15 years. That was the window that we were targeting in the pre-feas, and I think we're going to get there in fees. I mentioned permitting. Top line is the US NEPA permitting process. So we've just submitted the mine plan of operations. That then leads through a process to get to a notice of intent. We expect to have that late this year. That gets us on the federal registry. Once we're on the federal registry, it's now mandated 2 years from the notice of intent to the decision notice. Final decision notice is that Perpetua have just received, the Stibnite project. They've just gone through this process. So we see us getting a decision notice late 27, build 28. The bottom line is the sort of technical program to complement that, the permitting path, feasibility resource late this year, fees engineering 26, long leads during 27, build decision late 27, once we get the draft notice of decision. We can get this built in 9 months, so we're targeting metal by the end of 28. That puts us inside the window of this administration. Idaho is strongly pro-mining. Brad Little, the governor, in his new term, is targeting big mining. He has reduced significantly in his first term the red tape in Idaho for permitting across the field, and he's now targeting the same in his second term. We're going to benefit from that. We're going to benefit from the current administration. And we think and we believe that drill, baby, drill will translate to mine, baby, mine. What are we going to be doing this year? As I mentioned, we've got the pink you see in the center is the main drilled out area. We've got these targets in blue in this peripheral area that we've just permitted. We're going to be putting drills into the field within a couple of months to do the resource work, infill, drill out the final inferred to get us to a full indicated model. We've got a bunch of engineering planned ahead of starting formal feasibility, monitoring wells, site investigation. And I think we're going to be transforming the company this year in terms of what this asset can deliver. In addition to that, I mentioned we've got this kind of spicy antimony piece going on at Goldstrike. Goldstrike is our asset in the southern part of Utah. It's close to the town of St. George. It's in an area that's got significant water challenges. And we did a PEA on this in 2018, and we have been working since 2022 with the local district to figure out how do we find a water supply, How do we drill that out and how do we permit it? We're still in that process, and until we get that done, we're not going to put a lot more money in the ground in Goldstrike. But we, antimony has taken a fresh view in the world with the US focus on critical minerals. We knew that we had antimony in this deposit. We just sort of forgot about it. So we went back into the ground, had a look, realized that there is a previous small mine on this deposit, the Lajive mine, right in this center. Went back into the field and discovered that we've got a series of jasperoid breccias that are containing massive stibnite, oxidized stibnite. We've got over 2% in our records, in hand specimens. So we went back into the field, did a bit of mapping, and mapped out significant strike lengths of these jasperoid breccias, resampled. We've now got up to 5, nearly 6% in hand samples in outcrop, 4 grams of gold. We've got a couple of kilometers of strike length of these jasperoid breccias. We've got samples in the lab now for metallurgical test work, just to give us a sense of what does it look like. We have an emerging concept model about this alteration, this jasperoid breccia forming at the boundary of volcanics and sediments associated with fluid flow and some shearing. No drilling in this at all. So I think it's really interesting upside. If you put on your rose-tinted spectacles, we've got the volume and the strike length to be a significant antimony producer in the US. Lots of interest in this, and I think we're going to take this to its logical conclusion this year and see where that takes us. We don't want to blow our brains out on this. Black pine is our key focus, but this gives us some strategic opportunities with our Goldstrike deposit. How does that sit in the portfolio, and what do we do with it? In summary, big year for black pine. We are fast-tracking it through US permitting. 3 years from now until a decision notice is fast. We think it's doable. This year is all about setting ourselves up for feasibility, drilling, engineering works, and then, of course, to finally recap, what does Antimony Ridge mean for us? Is it real? Where do we take it from there? An exciting story, Liberty Gold, 5 million ounces of oxide gold in the Great Basin, one of the last large oxide gold deposits not held in the hands of a major. So we think that's an opportunity. Thank you very much, everybody.